Started. Folks come in. So again, thank you for being here. My name is Raquel Reddy, Managing Director of Community Development at NCST. It is a pleasure to join you all on this beautiful Wednesday. We have a lot to share this morning, and part of which is my pleasure to introduce NCST's new president, Christopher Tyson. I'd like to tell you a little bit about Christopher, and then Chris will come on and introduce himself as well. But let me take a moment to just share a little bit about our new president. Christopher J. Tyson was recently a Newman Trowbridge Distinguished Professor of Law at Paul M. Herbert Law Center at Louisiana State University. Go LSU, I guess, Chris. In December 2021, he completed a 4-year term as the president and CEO of Build Baton Rouge, the city's redevelopment authority and land bank. Under his leadership, the city launched a $50 million bus rapid transit project, also won a $30 million HUD Choice Neighborhoods grant, and was awarded the highly competitive $5 million JP Morgan Chase Advancing Cities grant. Chris also helped to establish the Baton Rouge's first community land trust, and during that same period, Build Baton Rouge acquired and prepared for development over 20 acres of vacant and blighted urban property and administered over $20 million in HUD community development grants on behalf of the city of Baton Rouge. Chris received his Juris Doctorate degree from Georgetown University Law Center, his Master of Public Policy degree from the Harvard Kennedy School, and his Bachelor of Architecture degree with honors from Howard University. It is my pleasure to welcome you, Chris, to your first Community Impact Briefing call. So take it away. The floor is yours.
Thank you. Thank you so much, Raquel. Good morning to everyone, and thanks for joining. After that introduction, I should probably just not say anything, but I will say that it is just a pleasure to be a part of the NCST family. So very excited for all of the good work that's going on with NCST, the incredible foundation we have to build upon, and very excited about the future that we're going to co-create together. And we look forward to our interactions and feedback and input from so many of you. And we thank you for taking time to attend our community impact briefing. I have the pleasure of introducing our speaker today, who is well known to NCST because she is one of our board members, Yannicka Radcliffe. And I want to share a little bit about Yannicka, and then she'll come on and greet you all as well. Yannicka is the Vice President of the Housing Finance Policy Center at the Urban Institute. Her career spans industry, the nonprofit sector, academic research, and the federal government. And her work especially focuses on increasing access to financial systems that foster economic security and prosperity. Prior to Urban, Yannicka was the assistant director at the Consumer Financial Protection Bureau. Prior to that, she was the executive director of the University of North Carolina Center for Community Capital. Prior to that, she served roles at GE Capital Mortgage, the Center for American Progress, and Self-Help. She currently serves on the Consumer Affairs Advisory Council of the Mortgage Bankers Association. And as I mentioned, she is a distinguished member of the NCST board. And Yannicka hails from UNC at Chapel Hill, where her studies focused on economics and French. So Yannicka, I'll hand it off to you. So happy to have you on.
Thank you, Chris. It is my privilege to be here on your first briefing, and always funny to sit through while someone reads your bio. So
Isn't it
appreciate that. I appreciate that introduction as well. And it's also a pleasure to share research that we have been doing for the last couple of years. It's still kind of ongoing, but we have been working with the Wells Fargo Foundation, who has funded the work I'm going to share with you all today. And we're going to connect that research with what's going on in a diverse set of communities. They may be familiar to some of you on this call. To do that, we're sharing this research in a new way, so I promise you no slides. Also, I will mention that you'll see the face and hear the voice of another NCST board member, John O'Callaghan, in some of these clips. These will be videos. So to just orient everybody, the research that we're presenting today looks deeply at racial home ownership gaps which today for Black and white households are, as wide or wider than they have been. And certainly since 1968, when housing discrimination was made illegal, they're the same size they were then. And our projections are that this gap will continue to grow into the future, and the implications being that without doing more to improve homeownership opportunities for households of color, we will actually see the homeownership rate overall in this country decline into the future. So as we try to understand some of the root causes and things that are sustaining this gap, we looked at several interlocking factors. You'll hear about structural racism, household level factors, community level factors, property level factors, and all those things. So first one, we're going to start with looking at the trends and structural racism's role in setting the stage. And I'll ask that we can cue segment 1 of these videos. Thanks, David.
Homeownership is the embodiment of the American dream. In our national consciousness, the idea of owning one's home has been wrapped up with the concept of freedom itself. But beyond just a symbol, homeownership is a key tool through which families build wealth over lifetimes and across generations.
In America, the odds of having a dignified life greatly reduce if you don't have wealth accumulation. Your housing stability is one of the biggest indicators of your quality of life.
There's equity that you're building in your home, and that equity can help to pay for starting a business, for sending your kids to school, for sending yourself to school. It can really be something that changes the trajectory of your family.
In the United States, we have a growing racial homeownership gap that should be narrowing as we move towards equality and equity and opportunity. But unfortunately, we're seeing the racial homeownership gap get worse.
The problem is not just about homeownership. Nationwide, not only do white households have higher homeownership rates relative to households of color, the homes that white households own are worth more than those that people of color own. Furthermore, homeowners of color borrow more than white homeowners do in order to purchase a home. This means that they have less home equity than their white counterparts, even when the homes themselves are valued the same.
There are so many families, especially families of color, that have not had the opportunity to participate in the great American dream of homeownership. These communities have been left behind for so long, it's going to take a long time to catch up.
There are a variety of factors at the household level, property level, and neighborhood level that start to explain some of the discrepancies in home ownership and home value. But even when these factors are controlled for, Black and Hispanic households still have lower valued homes than white households. This discrepancy is partially rooted in historical racist policies. Policies like racial covenants, which were embodied in property deeds at the beginning of the 20th century and stipulated who could and could not own a particular home. And redlining, which created systematic disinvestment in neighborhoods of color, while white neighborhoods received significant investment from financial institutions.
When my dad got out of World War II, he was able to get a near zero down, low cost loan from the Veterans Administration and buy a home. And if you were a soldier of color, you weren't able to take advantage of that financing because federal government programs wouldn't invest in a neighborhood that had even one family of color.
When you look at the history of redlining, because of over a century of disinvestment, those neighborhoods stayed poorer. They were more often communities of color, and so the ramifications continued to play out.
The same communities that were redlined historically are where homes that are in a state of disrepair and need some rehabilitation investment are the most concentrated. The appraisal industry has historically and continues to this day to undervalue the assets of homes that are in these communities.
Racist housing policies and practices continue to this day, and they impact the discrepancies we see between white households and households of color at the household level, the property level, and the neighborhood level. These are persistent and damaging trends which will only be made worse in the years ahead by factors like climate change. To tackle the structural racism that is holding back home ownership and home equity rates among people of color, we must better understand the symptoms of this broader problem, develop policies targeting the household, property, and neighborhood characteristics that so often give rise to it, and learn from leaders across the country who are making a difference in their communities.
Whether you're talking about disposable income, whether you're talking about the price of your home, all of these building blocks were laid on a foundation of structural racism. It's important that we look at them through that lens of structural and historic inequities that have occurred in our communities and how they've benefited some groups and intentionally harmed others.
The time to act is now. We are in a severe housing crisis. We need to have strong action, and a part of that should be including a lot of folks at the table that are on the ground walking it every day.
It's important to keep in mind that these effects are not static. Not only do these wealth gaps persist, they grow. And without interventions that make a more equitable playing field, they will become insurmountable.
We need to create homeownership now to deal with family success decades, perhaps centuries from now.
To understand why white households have
we'll take a little break between these various segments. Thank you so much, David. I just wanted to bring out one point that you heard about in the last video to really emphasize that not only were we looking at the home ownership rate gap, but also the gap in values of property. So not only are households of color less likely to own, but when you add on top of the fact that they own properties that have less value and in many places are less likely to appreciate at the same rate, you're really seeing the way in which the home ownership gap manifests in terms of the gap that maybe really matters the most, which is the overall wealth gap. So I just wanted to strengthen that point, and then we'll look at some next segments that look at the various factors. In this case, the first video is about household level factors that continue to sustain these inequities. So tee it up, David.
home ownership and a disparate amount of home value when compared to households of color, you have to begin with disparities between the households themselves. That starts with differences in income. Across the country, white households earn more than households of color. Black and Hispanic workers are more likely to be unemployed than white workers, and they are usually the first to be fired during downturns. The racial and ethnic disparities are rooted in a history of systemic racism.
There's a significant discrepancy between incomes within the city of Minneapolis and within our region. Over 70% of people of color renters in the city of Minneapolis have incomes below $60,000. Only 20% of the homes for sale in the entire city of Minneapolis are affordable at that income. And often those homes are the primary types of homes that investor purchasers are trying to purchase. Because they have such low values, it means that there's a significant opportunity for a return on investment if you make some improvements to the home.
In our day-to-day work at Community Legal Services, we're seeing the racial homeownership gap get worse. And in Philadelphia, unfortunately, we also have a wage gap. The median wage for Black folks in Philadelphia is lower than the median wage for white folks. So what this means is it's more difficult for the average aspiring Black homeowner to save up money in order to purchase a home than the average white homeowner.
Even when you control for income and educational attainment, the housing gap persists. In fact, for those younger than 35, Black college graduates have lower rates of home ownership than white households with a high school diploma. Why?
Philadelphia, like a lot of cities in our nation, has a history of racist housing policies. We're one of the most segregated cities. It is not uncommon to go from one neighborhood that may be 80% white to go 5 blocks away and you're in a neighborhood that's 80% or 90% Black. It affects where the city invests its money.
Redlining that concentrated people of color within communities and also racially restrictive covenants that prevented people of color from purchasing homes led to concentrating people of color within neighborhoods that were also devalued. There's still a tendency within mortgage companies to deny people of color applicants at double the rate of white applicants with a similar credit profile.
Even when Black homeowners qualify for a mortgage, the practice of reverse redlining is still very persistent in Philadelphia. Reverse redlining occurs when mortgage lenders offer mortgages in Black neighborhoods that have more predatory features. Mortgages being extended to aspiring homeowners in Black neighborhoods that have higher interest rates, balloon payments, have other features that make it more difficult for these homeowners to hold on to their homes and to continue to pay their mortgages.
Black and Hispanic households are more likely to have a lower credit score or a missing credit score that affects their ability to qualify for a mortgage and the price that they'll ultimately pay for that mortgage. These differences stem from a long history of racist policies and practices that have denied people of color opportunities to build intergenerational wealth from which they might build a traditional credit profile.
When you stack up all of those cards, the deck is significantly stacked against people of color homebuyers. When you have to pay more than 30% of your income for your housing payment, that cost burden can make it very challenging to save the money that you need for down payment assistance. It can also make it challenging to have the credit score that you need to have in order to qualify for a first mortgage at an affordable rate. When you're in a position where almost all of your money is going towards housing payments, it changes the trajectory of your life. You're in survival mode rather than flourishing.
To help households of color increase home ownership and home equity, we need to find ways to help them afford more valuable homes. This means thinking about policies that aren't typically considered home ownership strategies, like workforce development programs that help families of color build wealth. We also need to support households of color through programs like down payment assistance and by creating more affordable rental housing units to allow households of color to build savings. If we don't, we'll see more of what we've seen in the past, with housing wealth disparities compounding and holding future generations back.
Okay, so the next segment is going to look at something that I think is near and dear to most of you all's heart, which has to do with an overlay of the property level issues and supply issues. And in this case, we're going to be taking a sort of the lens of Atlanta on this particular issue. So here we go, David.
There is a need in the country, particularly in Atlanta, for affordable housing. In Atlanta, prior to the recession, we had one of the top 1 or 2 home builder associations full of local home builders. During the recession, those local builders got hit. National builders came in the market. National builders have national, international capital, and that capital was aligned to the top profit. And the way to make the most money in Atlanta is to develop one home that's a higher income home and get a return on that larger investment. And so that is where the capital and the builders have flowed. As of 2 or 3 years ago, 95% of recent new residential construction had been luxury apartments. Our production of housing is about 25% of what it should be, and that production is overwhelmingly in the top end of the market.
Property factors, characteristics of the houses themselves, are also key drivers of the home value gap. The problem begins with supply. Simply put, there are not enough affordable housing units available for purchase across the country. When combined with income, wealth, and lending disparities, this supply issue means that it's harder for households of color to purchase a home than it is for white households.
There's not enough housing affordability. As affordable housing stock is aging, we are not able to build at that same level to catch up with what's being lost. And so we're literally playing catch up.
We have 1 month of supply of homes in Metro Atlanta. There's just not enough inventory. And when you are competing against investors who have cash, homeowners generally are going to need to get an FHA mortgage. They may need to line up down payment assistance. If we as a not-for-profit can buy a home that needs some renovation, renovate that home, and then offer it on a first look basis to lower income families, we can give buyers a fair chance at getting a home that they can afford.
It's not surprising that a home's physical structure impacts its value. Across the country, white homeowners are more likely to live in detached single-family homes, which is the most valuable home structure. But with a low supply across the country, homeowners of color are often priced out of these homes. White homeowners also tend to live in larger homes with less expensive forms of energy, such as electric or solar, all of which boost a property's value.
Historically, there was discrimination in the marketplace. We have zoning practices, we have placement of expressways and trash facilities that all were disproportionately placed in African American neighborhoods. So there have been historic gaps in price appreciation. Another component of that is appraisals. We saw that in the foreclosure crisis, where two homes that were same distance from amenities that were built at the same time had been upkept in the same way and rehabbed in the same way. You come out with two different values, that is bias. And I suspect in many areas of the country, it's continuing. The challenges are overwhelming, and we just have to continue to do more.
Most cities that are making strong strides in addressing their housing affordability challenges have a significant amount of density. Atlanta has less density now than we had 40 years ago. About 60% of the city is zoned single-family residential.
Atlanta's predominantly a single-family home market. That's great. We just need to be able to get smaller, well-designed single-family homes that work for families, but we need to get more of them 1 acre wide.
As policymakers, we have to be willing and open for every idea that comes to the table to help housing affordability in our city.
In addition to needing to end bias in appraisals through anti-bias trainings and ending racist zoning policies, the nation will need to address the shortage of affordable housing. Policies that lower the cost of constructing new homes must be pursued in order to increase the supply and lower the cost of these units. Doing so will allow more people of color to purchase these kinds of properties and begin to increase their wealth.
Families need stability. Our homeowners are stable in their communities, and that stability creates wealth. The future is going to be defined by that family success that ties so much to wealth.
So in that last segment, we also we heard not only about property level factors, but the interplay between the property and then both historic and current neighborhood level factors that also play a role in sustaining this gap. So the next segment looks at more at those that neighborhood factor overlay, and in this case, the focus is largely on St. Louis Park, Minnesota. So David, we're ready.
St. Louis Park is 50,000 people, a city that is a classic American post-war suburb. Almost 60% of the housing stock was built in a 5-year window from 1946 to 1951. It's a city that is about 80% white. Going back to the early 1900s, you start to see the inclusion of racial covenants on home ownership, which means you're not allowed to sell this property to people of certain races. Developers were buying properties in suburban communities like St. Louis Park, and then were inserting these restrictive racial covenants into the deeds as a way to say to homeowners the presence of even one Black family can impact property values. And they would use that to drive white folks to the suburbs, to neighborhoods like mine, including homes like mine with restrictive racial covenants on them. A foundation was laid about what American communities were going to look like, and it was based on race.
Household and property level challenges that lower the value of homes owned by people of color can easily scale to the community level. Forms of racial prejudice, like appraisal error, can become community-wide when these homes are used as a comparable sale in the transaction of another home in the neighborhood. And real estate agents have a history of steering Black and Hispanic home buyers into communities of color when looking for a home. Homeowners of color are less likely than white homeowners to report that they live in a neighborhood with good schools and are more likely to believe that they live in neighborhoods with petty or serious crime or flood risks. These are all factors that decrease the value of homes in neighborhoods where people of color live.
Our challenges are a lack of supply for home ownership. There are issues around debt to income ratios, down payment challenges, higher transportation costs to get folks from suburban communities to job centers. But more importantly, I think than any other for us is this overriding issue around structural racism. It's really incumbent upon mayors and community leaders who look like me to be on the leading edge of that work, to acknowledge it, name it, and start putting money behind it. We've been really intentional over the years on focusing our housing policies to not concentrate programs and support and initiatives in one neighborhood versus another. For example, our inclusionary affordable housing policy, which has created hundreds and hundreds of affordable rental units in our community, that has been integrated into our growth across the city. When we look at transportation, we have the largest infrastructure project in the state's history, the Green Line extension. The city of St. Louis Park located stations in areas that we knew that there were more modest housing. As a city, we are looking at our practices and procedures that have been deliberately exclusionary and have kept people out of the decision-making process. Let's make sure that folks who have the greatest possible access to speak their voice. We didn't get into this problem overnight. We are not going to fix it overnight. What we know is that when we use the policy tools that we've got at our disposal, there is an impact on the other side.
Community problems require community-focused solutions, but there are still some common ingredients that can help shape efforts to combat the home value gap at the neighborhood level. First, these efforts should be spearheaded by local leadership that is responsive to community voices. Second, community investments must be equitably distributed within jurisdictions. And third, community development strategies must respond to the community's histories, priorities, and needs.
My hope is that we are able to change these systems of inequity through a sense of urgency. This pattern has been going on, and until we treat it as an urgent problem, it's quite simply not going to get resolved.
Okay, great. And we have one last segment. Obviously, everything you've just seen gives folks a lot to think about for past and current factors that we need to grapple with. And if that wasn't enough, we need to look, and we are exploring through this research some questions about climate equity considerations and what that future might hold for this issue about racial homeownership based wealth gaps. So you can see the last video, David. Thanks again.
Hurricane Harvey hit Texas with a vengeance in 2017. Houston just looked like one big, huge lake.
Immediately, you saw different communities receiving different levels of attention in terms of rescue operations and response operations. That discrepancy only continued to grow over the course of the recovery. We still have people who are displaced from their homes. We still have people who are not seeing their homes appreciate in value. So we see this persistent degradation of the asset and of the human spirit.
Harvey was a great example of what could happen. And we're still dealing with that almost 5 years later. We can no longer say, what if? We know it will happen.
Climate change has a large and growing impact on housing and communities. That impact is felt disproportionately by people of color. Black and Hispanic communities are more likely to live in homes and in neighborhoods with greater risk from floods, storms, sea level rise, wildfires, drought, and extreme heat.
There's a direct correlation between neighborhoods that historically have been redlined in Miami and those neighborhoods that experience extreme heat. There are a variety of factors that help neighborhoods stay cool. One of those is tree canopy. Those redline neighborhoods have much less tree canopy than other neighborhoods. They also have more pavements, areas where there's no place for rainwater to go, no grass that can help with cooling. All of these factors contribute to rising temperatures in those urban neighborhoods that had experienced a century of disinvestment.
Climate change definitely has an impact on housing value, especially in a region like Houston on the Gulf Coast. Oftentimes people will say, well, hurricanes are not discriminatory, but the recovery process most definitely is. What we typically see is the low-income communities of color that are most impacted are having the hardest time recovering. They don't have the property insurance, they may not have expendable income, so they're waiting. They're just waiting for some type of assistance. Another issue that we're continuing to see in areas that are gentrifying, those property values are increasing. So that means that property taxes are also increasing. And if you are a low-income person, you have a hard time paying those property taxes. And then when a disaster hits, if you are in need of assistance, you have to prove that you are current on your property taxes. What we end up seeing is that these repairs are not made and the conditions just continue to deteriorate.
The patterns of disaster make it so that new home development is really expensive. So because you have to do underground detention or elevate a structure, that increases the cost of a home, making it less affordable. It makes it harder to enter home ownership. It makes it harder to maintain your home ownership. Then it means that the value of the asset is decreased if you can't access publicly supported repair and recovery programs.
Historically, those areas that were on the waterfront were the most valuable. Now that waterfront property is becoming less valuable, and there's more interest in those properties that are at higher elevation. Here in South Florida, we have a coastal ridge, which is a little bit inland. That coastal ridge was an area that had been redlined. And what we're seeing is more speculative purchasing in those neighborhoods. The question becomes, where do those families move? They're left with having to move to areas that are less safe in the face of climate change.
This push of people of color toward higher risk areas could reduce their ability to get an affordable mortgage and achieve home ownership. But even if they are able to buy a home, living in a higher risk area may limit growth in the value of their homes. And maintaining home ownership becomes even more expensive due to its impact on insurance and the cost of building resilience into the communities.
In a place like Houston, where you have this incredible shortage of affordable housing, the center of the petrochemical industry, the nation's leading eviction crisis, whether or not we get the combination of housing and climate response right really is a matter of life and death for people.
Unfortunately, there are no easy answers to protecting communities from climate change, especially as its impact is expected to worsen in the years ahead. But housing leaders concerned with the impacts of climate change will need to prioritize racial equity when addressing climate impacts on homeownership.
The goal of disaster recovery shouldn't be to return to normal. It should be to create something better than we've ever experienced. It should be a vehicle to really advance equity and repair historical injustices and prepare us for continued climate crisis and climate disasters.
Everyone should be able to have the opportunity to thrive, to be able to have a safe place to call home, to be able to know that their home will generate wealth, so you can pursue those dreams and have a flourishing future. Homeownership can be the cornerstone of hope for so many families and their future generations.
Thank you again for showing that, David, and thanks everybody for sitting through it. That is pretty much a wrap. I will add that this video is available. I can share the link. I'll make sure, I guess David has the link now, but I can make sure NCST has the link. So if you guys would find this useful in some of your work, pieces of it, you know, it is there to help advance the work.
So I'm Chris Siglin. I'm the Vice President of Policy and Partnerships at NCST, and I'm going to be moderating the question and answer. So everybody, you've got one of America's foremost experts on homeownership here to ask questions. So if you have questions about that tremendous amount of complex substance that those videos present, please put your questions in the chat, and I'll be moderating the chat, and you can pose them to Yannicka. And I'd like to start with, so there was a complex set of factors over decades as you at the Housing Policy Center look at the policy solutions, how do we begin to start creating a solution to a problem that's many decades in the making and that has dimensions of both spatial and economic equity?
Thank you for that question, Chris. And if I had the answer, I would be doing it instead of showing movies about it. But I do feel like the current moment, I'm actually sitting in St. Paul, Minneapolis area, and the current moment, both highlighted by the George Floyd murder and the inequalities that were super, I think, exposed to people's view from the pandemic. Really, if you think about it, the way in which home ownership was privileged through the pandemic and the economic crisis, well over, like, homeowners were big winners on so many fronts, and renters were big losers, in terms of affordability, in terms of missing out, in terms of, the eviction risk they faced at the end of the moratoria they are facing. So I guess people, the one thing I would say is that this does feel like a moment in time where we need to really keep this story alive, and that is creating some momentum that is feeding from the federal level down to the local level across a bunch of silos. I'm seeing new levels of cooperation. I'm seeing a moment of opportunity. So I do think that people have gotten wiser to not just thinking there's one single solution that is going to fix the thing, and that it takes all the pieces. So today, this minute, and tomorrow, you got to keep doing what you're doing, whatever your part of the solution is. But I think that we're all getting smarter about the way in which the individual solutions could connect to the bigger whole. And I'm sorry that answer is so philosophical, but I mean, it has to do with keeping the facts about the structural history and how it has gotten us to where we are and how all these other factors interplay.
Well, and I think there is a multi-year, all levels of government policy response that we need. And this is what NCST, one of NCST's projects is providing staffing to the Homeownership Alliance, which is a terrific membership organization of CDFIs and affordable homeownership developers like John O'Callahan of ANDP, who you saw in that video. And a group of these developers have come together working with NCST about focusing on the federal policy levers. And so those involve subsidies for the development of housing. And it also involves demand side subsidies like down payment assistance and housing counseling. So we're working on those issues at the federal level, but then there's also work people can do at the local level with zoning and inclusionary zoning, and and then a lot of the resources for doing affordable housing development flow through state governments. So wherever you have political relationships, there's things you can do to work on this problem. But I thought those videos were a very effective overview of the problem, and it's easy to get kind of lost in how numbing the statistics are. And I thought that the way you all personalized that story was really great. And here's a great question. How does the Airbnb short-term rental market impact the racial gap?
So yeah, Chris, I want to add to your what you just said, because I think in our dialogue with, for example, these cities here or some other projects where we're working to bring sort of the national level picture down to the local level and what can be done actionably there. These guys are pretty largely sophisticated, the ones you saw in the video, but in general, there is still a lot of knowledge gap at the local level about what's available and what's brewing at the federal level and how to influence it and how to connect that, and also at this, make the connection through the state levels and things like that. So I think your coalition is very powerful because it's bringing together this profound local on the ground experience with the sort of 30,000 million fit up view from the federal level. So another commercial for that, but I think that you're on the right track, and all of you all on this call. I would perhaps even model that by, this Airbnb question is part of a bigger question just about the returns to renting that can be made right now, and the advantage that deep-pocketed investors, whether they're institutional investors or more like local holders of multiple properties, who just have the ability to buy things as is, fix them up, a little investment. I think one of the videos mentioned this, and make a pretty sweet return right now, especially as supply is low and rents are skyrocketing. So Airbnb is a piece of that puzzle, I think. I do know that different jurisdictions are dealing with Airbnb in different ways, and I think it might be interesting maybe to hear in the Q&A. I think that's enabled. It varies. It's being dealt with differently from place to place, and this is a good example of how bringing in the various experiences of the on-the-ground communities can help contribute to the broader dialogue.
And we're also thinking about solutions at the federal level for the preference in markets for cash investors over owner occupants. And one of the things that former NCST President Julia Gordon has been working on at her new job as FHA commissioner is access to property auctions for nonprofits and owner occupants. So there's different ways that the federal government disposes of either notes and assets, and they're increasing the period of time to allow nonprofits and owner occupants to bid on those homes. But it's a tough problem to solve, because most Americans like the ability to sell their home to the highest bidder who gives them the best offer. But the problem is that preference collides with this persistent racial equity gap and makes it harder to solve the problem of the gap in homeownership rates. So I think that there are also things local governments can do about investor-owned rental properties that they can do with code enforcement to make sure that the homes stay are maintained in good shape. But yes, there's plenty of work for the Housing Policy Center to do going forward, looking at all of these complex questions. And again, put your questions in the Q&A if anyone has them, and we will be sending out the link to the videos and also this recording. So I'm not seeing any other questions. So let me thank Yannicka.
Thank you all for having me. This is great.
This work, and my colleague David Sanchez, who is NCST's Director of Research and Business Development, is going to give us a brief policy update and close us out. David.
Excellent. Well, thank you so much, Chris and Yannicka, and also to Chris Tyson and Raquel for all of your participation in today's call, and special thanks to Yannicka for presenting the Urban Institute's research and also how they are taking that research and turning it into action. I wanted to provide a few policy updates to close out the call. The first one is many of you will have probably heard by now, but we've been talking about the infrastructure bill or reconciliation infrastructure bill that the Biden administration was hoping to pass to support President Biden's Build Back Better agenda. Because of how those negotiations have worked out, it appears that the bill, which was originally supposed to cover kind of a wide array of social and equity investments in things like housing, childcare, climate, et cetera, will now primarily be a healthcare bill. So the impact of that is for the spending priorities or tax priorities of NCST, such as the Neighborhood Homes Investment Act, or the many other pieces of housing funding that have been considered and debated in over these last years. They'll now need a different vehicle to move through Congress. So we are continuing to work on that, and we are continue to be optimistic about the bipartisan support of the Neighborhood Homes Investment Act will one day get it over the finish line. The second update I wanted to provide was about appropriations. The House Appropriations Committee has released its funding levels for I believe most or all of the federal government for fiscal year 2023, and the good news is that the HUD budget is being increased by almost 17%. So those are, investments that go kind of across the spectrum of HUD programs, but especially have positive impacts on things like tenant-based rental assistance. It is not clear where the Senate will end up. The Appropriations Committee in the Senate is chaired by Pat Leahy, who is actually out with an injury to his hip. Despite that, he pledges that the Senate Appropriations Committee will continue their work on drafting bills and also coming to some sort of bipartisan or bipartisan light agreement on funding levels. There have been I guess just sum it up to say that the ball is still in the air, and we were waiting to see where things land in the Senate when it comes to HUD funding for the next year. A next update has to do with staffing at the Department of Housing and Urban Development. As many of you know, Julia Gordon, NCSC's former president, has been on the job as the FHA commissioner for about 2 months now, and she has been very busy putting out all kinds of new policies. There were even just yesterday, HUD released, for example, a series of proposed updates to the HUD code that governs manufactured housing construction standards, as well as inspection and siting. That is, we consider very, very good and impactful work. In addition, we did want to share that Solomon Green, who had been the nominee before the Senate to be the Assistant Secretary for Policy Development and Research, has begun working at HUD as the Principal Deputy Assistant Secretary for Policy Development and Research. So he is in practice running that part of HUD, and he's a former colleague of Jannika's at the Urban Institute, and it's exciting that despite the continued gridlock in the Senate on HUD nominations, that he is in place. In addition, Marion McFadden, formerly of Enterprise Community Partners, and an alum of the Obama administration, primarily responsible for disaster recovery work, is also now on site as the PDAS for community planning and development. So there is now active leadership in place in both of those offices, and as we know, there's much work to be completed. So wanted to just provide an update on that. The final update that I wanted to provide is that the joint proposal from the banking regulators about updating the Community Reinvestment Act, the comment period on that closes on August 5th. For those of you who are thinking of commenting, we greatly encourage you to be supportive and also suggest improvements to what has been proposed. Chris Siglin, who you just heard from a couple minutes ago, is spearheading NCST's commenting efforts on that. And any of you who are interested in learning more about what NCST's comments will be, or in talking through the comments that you would like to make, we encourage you to reach out to Chris. Finally, I'll note that we will distribute the recording from this call as well as the video in a follow-up email shortly after we conclude. We are not having a community impact briefing in August. We're taking a summer vacation, as many of us will be, but we are planning to return in September with an exciting update on manufactured housing from Stacy Epperson of the Next Step Network, who's a great policy partner of NCST's and a really creative thinker about the ways in which manufactured housing can play a role in creating that affordable housing supply that we heard so much about during the videos today. With that in mind, if anyone has any questions about the policy update, I'd be happy to take them. You can either raise your hand or throw them in the Q&A. I'll give folks a second to do that, and if not, we'll close out our call for this week. Well, with that, seeing nothing coming just quite yet, I want to thank everyone for joining us today. We're extremely excited about Chris Tyson being on board as the next president of NCST. Thank you for joining today's call to meet him and to hear from Yannicka Ratcliffe about the great work that the Urban Institute is doing. So thank you very much, and we look forward to seeing you again in September.